Good day, good morning, good afternoon, and good evening. Thank you for joining the second session on the second day of the second BIS Innovation Summit. My name is Morten Beck, and I head up the Swiss Center of the BIS Innovation Hub. I'm super excited to be moderating this session, which will discuss foundational technologies that are driving innovation in the financial sector. We will discuss the benefits and risk around crypto exchanges, stablecoins, and DeFi, among other things. We will also explore the efforts of the public sector in keeping the financial system secure and stable. Today, I'm joined by three leaders, dare I say giants, in the crypto DeFi space. They're all working on creating the next generation of financial market infrastructure. Our panelists are Jeremy Allaire, the CEO of Circle, a global financial technology firm that's at the center of digital currency innovation. Sam Bankman-Fried, the CEO and founder of FTX, one of the largest crypto exchanges in the world. Michael Shaulov, the CEO and co-founder of Fireblocks, a digital custody asset firm. Welcome to all, and thank you for joining us today. The session is organized around a series of common questions for the panelists, but before we get to that, a bit of introduction is in order. Our panelists are well known to most, but for the benefit of the central bankers in the audience, I would like each panelist to briefly introduce themselves and talk a bit about the company that they lead. I suggest we start with Jeremy, and then we can go to Sam, and then end with Michael. So over to you, Jeremy.
Thanks, Morten, and thanks for having me here today. As noted, I'm Jeremy Allaire, CEO and co-founder of Circle. I've been an internet technology entrepreneur for about 30 years, worked on a lot of different products and software technology products in the internet space, but started Circle about 9 years ago. And really our mission and vision has been really anchored in this idea that we could build financial applications around public blockchain infrastructure. And in particular, the idea that we could build what I like to think of as a hybrid digital currency model where we could take fiat currency such as dollars or euros or other major currencies and express those as digital currencies that function and operate on top of the public internet, on top of this public infrastructure. And really the mission is, how do we bring the cost of storing and transmitting value to as close to zero as possible? And then secondarily, how do we open up the innovation that becomes possible when you have fiat money that's programmable on the public internet? And I know we'll talk a little bit more about that. Our core business is that we're the principal operator and issuer of USD coin or USDC, which is one of the largest dollar digital currencies in the world. Grew 1,000% last year, and the year before. There are about 53 billion in circulation today, and it's really a core market infrastructure for the crypto economy, for digital assets, exchanges within decentralized finance, and increasingly being connected to existing payment systems, existing payment processors, and a lot of other internet firms who are really using it as a way to efficiently conduct dollar-based transactions over the public internet. So that's a little bit about myself and Circle.
Thank you. Sam?
Yeah, I'm Sam Bankman-Fried, the co-founder and CEO of FTX, a global cryptocurrency exchange. I went to MIT, worked on Wall Street for about 3.5 years after that, and got involved in the crypto ecosystem in 2017. FTX is it's a cryptocurrency exchange, and what that means in context is it's a full stack product. So we do everything from sort of the front end interface, the back end technology, the matching engine, the mobile app, the custody, the clearing, and sort of everything else, baked into one product. we have about $15 billion of volume that transact daily on the platform, making us the second or third biggest globally, of the crypto exchanges. And we've, spent the last year focusing chiefly on regulation, on, getting as licensed as we can, and also on, helping to build out the global regulatory infrastructure for the, cryptocurrency ecosystem.
Perfect. Thank you. Michael.
Yeah, so my name is Michael Shaulov. I'm the CEO and co-founder of Fireblocks. Personally, I actually spent the first 2 decades of my career in cybersecurity. So initially worked for the Israeli Cyber Command, and then had a few ventures in that space. And before starting Fireblocks, actually was running the innovation for a company called Checkpoint, which is one of the biggest network cybersecurity companies. And we started Fireblocks back in 2018, so about 4 years ago, with the goal to essentially secure crypto, right? And the 2 things that we basically do, first and foremost, we provide a secure custody infrastructure for our clients. So basically all the wallet or storage infrastructure in which institutions and businesses can safely keep those assets. The second thing that we built over the last couple of years is what we call the Fireblocks network. So it's essentially sort of a layer 2 messaging infrastructure that allows institutions currently to do secure settlements over the different blockchains without being susceptible to all kind of attacks, and basically simplify the operational process. And in the last, I would say, 18 months or so, we were basically going very deep in terms of providing and enabling DeFi for our clients and allowing them, sort of unleashing their ability to securely and efficiently operate with all the innovation that is happening in this space. So we're currently servicing over 1,000 financial institutions, from hedge funds to exchanges to some of the well-known big custodial banks in the world. We're also working with a lot of payment service providers and so on. And we currently, over our platform, there are about $260 billion of assets that are being transferred every month. Actually, 30-40% of that is stable coin. The big majority of it is actually USDC. And tens of billions of dollars of custody in our wallet, and we continuously addressing more and more interesting use cases.
Thank you, and thank you very much for those introductions. That was great. The first question is very high level. It's really about the future of finance. So finance never stands still, but what is your vision really for the future of finance? What will the financial system look in, say, 5 years? How can DeFi or crypto really be leveraged for real world assets? And maybe I can also ask, what roles do you think banks will play in the future, if any? And maybe also, what will be decentralized and what will be centralized in your vision for the future? So perhaps starting with Sam and then going to Michael and then Jeremy.
I mean, the first thing is, I don't know. No one knows. We're all making this up as we go. But if I had to guess, what I say. So I think one thing is that we're going to see a fair bit of disintermediation. I think we're going to see a lot more equitable access to financial markets as we transition a lot closer to a world where everyone, whether you're a sophisticated trading firm or whether you are just someone looking to earn some interest on your money, can get similar access to financial applications and protocols and liquidity, which is very different from how a lot of markets work today, where frankly the access that most participants have is not very good compared to what happens if you can directly access marketplaces. I think that's something that crypto has been really good at, and I think it's something that we're going to see transported to a lot of other areas of finance, over the next few years. So that's one area that I'm pretty bullish on, and do think there's going to be significant movement on. I think that hopefully that's going to just create a better environment for all the users.
So, yeah, I mean, I do agree with Sam that we definitely don't exactly know, but I think we all collectively actually spending a lot of time on trying to figure out how this sort of like event horizon looks like, right? That point in time in which the transformation of the financial system is, going to be decentralized, right? And we actually, because this is a decent chunk of our business, we're actually spending also quite a lot of time with the traditional financial institutions, including banks, including central depositories, and so on. So, I mean, I think that there is like a clear vision around crypto, and I agree with Sam with everything he said. I think that what is really exciting that we are seeing right now in the market is that once we were able to bring the basically like the digital fiat currency, right? And not going to steal Jeremy's thunder here. That actually basically unleashes a lot of really powerful use cases around tokenizing a lot of other assets, right? So I think a lot of people heard about NFTs, but essentially NFT beyond just tokenizing digital art, it actually carries implications in terms of tokenizing any other security, any other financial application, and so on. And we're actually seeing a lot of players, a lot of big asset managers, a lot of investment banks actually starting to look into how to propagate that into the primary and secondary markets, right? So the first thing that is obvious is that given the regulation, is that some of the traditional financial players are uniquely positioned in terms of bringing those or tokenizing or creating like the digital issuance, right, of those assets, which is interesting. But then I think the question that is being asked is that what will happen next, and it's fairly clear that there will be a lot of players will be disintermediated. I mean, I think that there are questions around the central clearing houses, both for FX and both for securities, if this is still like a structure that will be needed over the long horizon, because basically, if you look at the decentralized protocols like Uniswap and others, or repo markets, if you look at protocols like Compound and so on, you're starting to see the equivalent of why you potentially will need some of that infrastructure. And then I think that there will be some kind of interesting, say, wrestle between the banks and the fintechs, because both of them are currently owning the clients, right? So they will be able to abstract the complexity of accessing the DeFi or the decentralized finance space for them. But the real question is who will be able to create the best experience from onboarding to continuous sort of experience of those services. And I think the question for that is still open.
Yeah, I would add a few things. So I guess when I think about something like 5 years out, I kind of try and come back to some first principles in terms of what I think is becoming possible, and then trying to imagine. I think as Michael noted, we're just getting to, I think, some of the most basic ideas that people had in this space, for the last 5 to 10 years. So the idea that you can have a full reserve dollar digital currency that can transact between any counterparty that has a piece of software or hardware on the internet, and they can transact basically at the speed of the internet, with near instant settlement, with very strong privacy and security assurances, with transaction costs that are a fraction of a cent. That's a really profound innovation, and I think we can't begin to imagine what people can do with that. I like to think of it similarly to when the open internet, the permissionless open internet, which is what the internet is. It's an open permissionless network that people can connect computers to, and then there's common protocols that exchange structured information and data. When the protocols of the internet connected and things like the web protocols came out, no one imagined that not only would all of the world's knowledge become instantly accessible to everyone for free, they also didn't expect that the volume of information that was created and published in the world would probably go up by like 1,000,000x, or when the cost of or the ability to structure a text-based communication between two humans on Earth went to zero and became instant, no one imagined the velocity and scale of communications that would happen in the world. So similarly, when you think 5 years out, in a world where basically it costs nothing for anyone anywhere, or whether it be machines communicating to other machines or entities facing each other, can transact and exchange value instantly. We can't actually imagine what is going to happen there. And in particular, there's this overlay of the sort of programmability of money. And we're seeing very nascent building blocks there. I mean, DeFi, which has captured a lot of people's imagination, I think the ideas behind DeFi have been around for 5 or 6 years, and then it really grew in the last couple of years. But that's only a couple of years. And when you think about the velocity of computer science innovation, developer innovation, business model innovation that's happening, the thousands and thousands of creative people around the world that are building on this public infrastructure, they're building new infrastructure for value exchange. And I use that phrase very generically, not just about payments, but really all structures of how economic organization happens, all structures for how economic exchange happens between entities. It's astounding. And I'll leave with one thought, which is, a lot of times when these kind of breakthrough technologies emerge, we really try and fall back on, the old world and say, oh, it'll be like, faster faxes, or it'll be like better long distance telephone calls, or it'll be like that. And usually those are really not great at predicting actually what happens. And it takes, it takes entrepreneurs to actually create what's going to happen. And when the iPhone came out, and when, in 2007, it was pretty cool. You could have a touch screen with it was decent interface. But then other technologies converged. So for example, 3G came along, and it was faster. You could move a little bit more data. And, Apple decided to put, and other mobile phone companies decided to put a GPS into their mobile phones. And people thought, oh, I can replace my Garmin, turn-by-turn navigations. That'll be really helpful. What they didn't actually think is when you combine those things, you could reinvent the transportation and logistics industry, which is what a number of entrepreneurs did at a massive scale all around the world that penetrated billions of people. That's profound. Programmable money on the internet on public infrastructure that anyone can access is going to unlock economic innovation that I don't think anyone actually can predict at this point, certainly not 5 years out.
Thank you. That was great, mind-boggling. I also had a question of whether you have any insights or views on how the transition will happen. How will we get there? I guess it's not going to be a big bang, as you already alluded to, but do you think it as being particularly messy? Are there some clear winners and losers? I think in one of the projects that we ran in the Swiss centers, along with some partners, we were basically integrating a new DLT-based infrastructure for digital assets with legacy core banking system, and I think that posed a lot of challenges for us, but also maybe limited potentially the benefits of these things. So are there some particular technological challenges in this transition? And if I maybe start with Michael this time, and then go to.
Yeah, I mean, the simple answer is yes. I mean, I think that there are just inherent compatibility issues between the new technology and the old technology. Just like, I don't know if that's the issue you guys ran into, but someone that actually working on a few projects where we're integrating our infrastructure to core banking platforms. For example, the precision that you can achieve using a network like Ethereum, right, is actually much greater than the precision that most core banking platforms are working on, right? So that is itself basically creates an issue if you're trying to, basically reconcile that information on an IBM mainframe, right? I think that there are other things that a lot of the infrastructure that is running DeFi is inherently running in the cloud and so on. And a lot of people are, most of the I think incumbents, they still have a lot of, whether those are regulatory or whether this is just like, inertia in terms of how they implement technology and how they implement IT. So that's basically, I think, on that level, there are also things that are mostly related to just knowledge gaps and risk, right? That I think basically create some very strong differentiation between how fast certain players can move and how slow other players are currently adopting into this. Now, I think that what really currently protects the incumbents are clearly lack of regulatory clarity, right? That exists in a lot of the jurisdictions, but I think that most of the regulators are actually looking to figure out and to solve and to enable the innovation. And once this will happen, I think it will be a race to see who is able to innovate faster and who is actually stuck with legacy. And my view is there will be winners and losers.
I would jump in just a couple thoughts. I think a lot of this happens very incrementally, right? Everything that I think, say, all three of the firms that you have here have done, we just sort of are constantly iterating, and we're not trying to solve for every edge case, right, that there is. And I think one of the most powerful things about this particular technology is the innovation is out in the open. It is literally, all of the infrastructure is literally open source infrastructure. It's literally run by communities of volunteers committing their own computing infrastructure. The improvement of the protocols, the improvement of it is all a public good. It's 100% in the public commons. And that's the way much of the internet has been built. It's become a very resilient infrastructure. And now we have this cryptographic computing layer, which is what these foundational technologies provide, that we're all kind of creating out in the open. And so rather than try and think through, what are all the, major hurdles we have to overcome, I think I'm just really encouraged that there are teams that are just working diligently on each little problem space and collectively trying to create a better whole. There are lots of challenges, of course. There's challenges with scalability, there's challenges with privacy and security, there's regulatory challenges. But I think everyone understands that those need to continually improve and are working on those. I mean, there are so many blockchains, for example, that are making major improvements in using zero knowledge proofs or similar types of technologies to provide the level of privacy that, say, financial institutions or corporations might demand out of an internet infrastructure. And I'm actually really encouraged by the engagement that exists from central bankers, from regulators, from policymakers all around the world to really constructively engage on these topics, to understand them better, to think about, if you have a digital currency bank or bank-like entity, what is the enterprise risk management? How do we think differently about operational risk or other forms of risk, and take a somewhat technology neutral approach to thinking through those issues? So I'm encouraged overall by the amount of attention there is on the challenges, but again, come back to this idea that this is all very incremental and will continue to be in the coming years.
Yeah, I mean, I think that there's obviously going to be winners and losers to this. There's going to be people who adapt. There are going to be people who lead the way. I think the big way that I think about this is when you break it down as a service you're providing, what's the value you're adding to your customers, to the economic system. And when you identify that, a lot of that translates over pretty clearly, right, into digital assets. And so I think this is a lot less about like, will this, sector be, a loser for this or a winner for this? And, not to say it's not a factor at all, but I think that's much less of a factor than understanding, with your particular business, like what are you adding here, right? And when you've identified that, often it becomes really clear how you can continue to add a lot of value, because it's just like, you've been doing that all the while, and yeah, the format might change a little bit with this, but fundamentally, it looks pretty similar, and so that's how I tend to think of this, much less in terms of like which general areas are winners and losers, and much more in terms of like, well, what's like this specific company going to be doing in order to adapt, in order to continue to provide value here.
Thank you. Just a quick follow-up question. I think a question that is on the minds of all central banks when they look at the DeFi, that's really scalability, which I believe, Jeremy, you mentioned. But Where are we in terms of scalability, and how long do you think it will take potentially to fix that problem, and can it be fixed?
I think we're making great progress. I mean, Bitcoin started with 7 transactions per second on a public network, which was a shared kind of public ledger. Ethereum moved to 15 transactions per second. These seem really small, but have actually supported a lot of innovation. But third generation blockchains are now delivering 50,000 transactions per second. And if you look at the architectures that are being put in place, the kind of off-chain computing architectures that kind of work as layer 2s, but also even the kind of core layer 1 blockchains, they really scale based on the improvements in high performance compute infrastructure, which kind of follows Moore's law of continuous cycles of productivity out of hardware, as well as growth in bandwidth. And bandwidth also similarly has a kind of somewhat nonlinear curve in terms of the expansion of bandwidth available. So those, if you look at those vectors over time, it's not unreasonable to see it where you could get to 1 million transactions per second on a public shared infrastructure. So I think there's been huge progress and continuing to be huge progress. And it reminds me of, with the public internet, people used to say, well, you're never going to be able to, stream HD television on the internet. You have to have proprietary infrastructure that's tightly controlled by regulated entities that charge a huge tax on individuals. I think that turned out obviously to be rather false. And the open internet eventually got to the point where it could provide not only a comparable, but actually a better experience because it gave people everywhere greater access. So I think the same thing is likely to hold true here in terms of continual infrastructure improvements.
Sam or Michael, any views on that issue?
Yeah. I mean, I think I definitely feel somewhat similarly there. I think that capacity has been and will continue to grow out quite a bit in terms of what just transactions per second look like. And as Jeremy said, there's already an enormous difference between what we're looking at, frankly, 2 years ago, what we're looking at today. It's not going to be easy to get there, and I think maybe this is something that I think people often sort of misunderstand. Is that you're starting to test actual limits of well, how much can you do here, right? How much can you, in practice, when all is said and done, run a decentralized system at really great performance, and it's absolutely doable, but it's also hard, and that just means that it's going to take time to keep improving it. There's going to be a lot of kinks to work out. This isn't something we should expect to get sort of perfect overnight or anything like that. But I do think that over time, it's just going to be getting better and better and better. And that, we're going to be looking at a world, probably not too long, where, there's just absolutely massive capacity to run complex systems in a distributed manner.
Yeah, I mean, I generally speaking agree. I think that there is a tremendous amount of sort of firepower, right, that is targeted on specifically that problem, right? There are, some of the best minds in the industry are really working on increasing the capacity. And similar to what Jeremy said, I think that, you can look at the internet, you can look at cloud computing, you can look at the sort of wireless communication. I think that the same or similar problems always existed when those technologies emerged, and I think that initially there was always sort of some degree of I guess cynical opinion that, oh, okay, what we have as generation 1 is sort of crap, and it's not suitable for mainstream adoption, or it's not suitable for mainstream applications. And because of the specific, because of the opportunity and the value proposition which was used, there were a lot of technology teams that basically eventually brute forced the problem and created the bandwidth that we needed. And I think that the history have proven that it's always going to be feasible, and my belief is that this is going to happen here as well.
All right, great, thank you. I think all of you have mentioned in one context or another regulation. So I would like to pick your brains in terms of how should regulation look in this future new world? What are the key things that you would like to see from central banks and regulators alike? And what benefits does technology offers for regulation? And but do you also see risks in as this play out?
Yeah, and the global regulatory framework for crypto is a bit of a mess right now. And I think in particular, there's currently sort of like a 200 country approach to it. And I'm being a little bit glib there. There's some cross EU sort of initiatives going on right now, but by and large, each jurisdiction is sort of trying to tackle this question separately, and that it's probably not exactly how this is going to end up in the end. But I think that it has been getting a lot better over the last year or two. I think you rewind a few years and almost no countries in the world had much of a framework at all for digital assets. Now you have, 5 countries or so that have comprehensive frameworks, but you have a lot more that are on a pathway towards that. And I think that, the United States has been enormous progress in the last year. I think that, the sort of like core things that we're going to see is one, sort of like auditing of stablecoin reserves is likely to become fairly standard. I think a second thing is just like markets regulation, clarity, federal oversight, systemic risk protection. And the third thing is some registration system for digital assets, many of which sort of like blur the lines between traditional asset categories.
Yeah, I would add to that. I think just in terms of advice, maybe I guess the way in which blockchains and financial services built on blockchains functions is very different, right? As Sam noted when he started out, FTX as an example combines custody, clearing, settlement, payments, trading, so many different things just in one software stack. And in historically, just in say capital markets, right, there are all these highly segregated roles, and so software changes the architecture. It also changes the nature of the assets. I think we as also kind of Sam, I think in general we need to come up with new definitions for digital assets rather than try and stick everything into one pre-existing box. It's a currency, it's a commodity, it's a security, but get very specific about defining digital assets, because we find many digital assets may carry attributes of 2 or more of those, but they still have risk, right? They have money laundering risk, they have custody risk, operational risk, they have disclosure risks, other things that are important. But we need to get to some kind of commonly understood definitions. But I would say in general, there is an impulse to try and map the way that the existing financial system works and its regulations onto a public internet open source infrastructure. But I think that that often doesn't map very well. And so I think there needs to be really a lot more learning and a lot more understanding about the way in which you can run a reliable, say, global market infrastructure on a public good, on public infrastructure, on open source technology. That just was inconceivable a number of years ago, but it's now certainly there. And so I think it does require, some open-mindedness and creativity on the part of regulators. Lots of very detailed issues, of course, that are worth talking about. But I would also agree with Sam that we've certainly seen a real pickup in the last couple of years to where this is quite a serious discussion among many major financial regulators, which is, I think, really encouraging.
Yeah, I think. Yeah, I definitely agree with both Sam and Jeremy. But sort of taking a step back, I think that there are 2 things, right? The first thing that Jeremy sort of touched on is that I think that we need to make sure that we don't basically try to fit something which is so new and so disruptive into the old frameworks, because like, many times either it's like basically breaks the essence of it, or it just basically makes things basically doesn't make sense, right? You basically look at some of those things, you're like, this is not going to do, this is not going to either protect the customers, or you cannot actually implement it. I think that the real interesting thing here right now for the regulators, right, is two things. One is, as Sam said, it's a global thing, right? So eventually has to be somewhat of a reasonably global, consistent framework, just because crypto or digital assets in general, it's 24/7, it runs on the internet, it has no borders, right? So I think that there needs to be some level of coordination between those regulations. The second thing is really that I think regulators need to first and foremost ask themselves is, okay, I mean, this is going to happen. How do I actually leverage this, not to basically create the same, I would say, like, protections for clients as exist in the old market, but actually, how do I leverage this to improve the protections for the end users? And that's definitely possible. So for even taking things that everybody are sort of always complaining about or criticizing crypto around money laundering, anti-money laundering, right? I mean, crypto is probably the worst way to launder money, right? Because it's traceable. You can see, Bitcoin, you can see all the transactions to the inception of that currency, right? And right now there are a few super interesting projects around on-chain KYC and technologies that I think will basically make the protection of the users much more powerful, right? A good example of this is that when electronic trading emerged, right, it was, I don't know, NASDAQ or New York Stock Exchange, I think that actually the regulators have benefited from the fact that they now have electronic surveillance and records and all that kind of stuff that they didn't have in the old system, right? And with this new system, there are really interesting startups that are actually, what they're bringing across all of those domains, they're bringing things that increasing the protection. And I think that the regulators need to go and learn what they do, and actually when they basically putting the new regulation in place, take advantage, right, of what is feasible, rather than basically trying to pull it back to the system that they understand.
Thank you. Yeah, please go.
I'll just say briefly on that, I agree with what both of you have said, is that I think that there's I think that a lot of the sort of like policy goals and the sort of like principles of regulation carry over fairly directly from other assets to cryptocurrencies around consumer protection and systemic risk and things like that. I think the implementation details have to be a little bit different in a number of cases, right? When you look at clearing policy, obviously the fact that these assets are transported on a blockchain like has to play a role in how they're cleared somehow. And so I think that you do have like a lot of sort of like differences when you get into the weeds, but that, again, at a high level, you can still have like a very, very similar set of goals you're trying to achieve.
Thank you. Very good discussion. The next question is a little bit about my own job security. So what role will central banks play in this future system as you see it? And if central banks were to issue central bank digital currencies, would they coexist with stable coins? Would they replace them, or would they not stand a chance in competing with stable coins? And also, what technologies might you see as most relevant for central banks going forward?
I can take a crack at part of that. I think the history of electronic money innovation in most of the world is a history of private sector actors working together, oftentimes in consortiums, building standards for interoperability, and allowing those to be adopted by retail, meaning businesses, households, and so on. And that's, I think, served society really well. And I think stablecoins are just another outgrowth of that kind of innovation. But in this case, it's an innovation that is converging with the public internet and open source technology. And so it has its own kind of power that comes from that. But at the same time, from a central bank perspective, clearly the architecture of money at its core needs to also evolve alongside this. I had a chance to chat with the chief information officer of the Federal Reserve a number of years ago, and I asked him, what's the tech stack of the dollar? Like, what is the actual, we know, what's the, I'm a tech guy, so what's the tech stack? And, I think he said it was a cluster of Oracle databases running on Sun Microsystem workstations. So that's the dollar. So when quantitative easing happens and, the Fed wants to buy $1 trillion of bonds from banks, they do a SQL insert statement, they create those new records in the database, then they go buy those bonds. That's the core architecture of the dollar. And could I imagine as a technologist an upgrade to that architecture? Clearly, right? We'll evolve from, these databases. You could imagine cryptographic money being the right next architecture for central bank core money, whether it be for intercentral bank settlement through platforms like BIS or in facing firms like Circle and other digital currency banks, traditional banks getting into digital currency. But I believe the kind of pace of innovation and technological obsolescence that happens from public internet innovation will continue. And so I certainly see coexistence, but I do believe that the core architecture will evolve from past computing and data and transaction technologies into something that's more secure and more interoperable.
Yeah, I mean, I think that there is still an open question where I think most central banks are basically looking at a wholesale CBDC rather than a retail CBDC, right? And then there is definitely a coexistence between stable coins and CBDC. I think one of the most most important things that are not discussed as much, but equally as important, is actually digital treasuries, right? Because when you look at why CBDC is interesting, right? It might be interesting basically for the wholesale part of it, right? But most of the market, the funding and all that is actually working through the different treasuries and bonds in the market in order to basically unleash the real power of that, or to basically get to a full transformation which will benefit the system. I think central banks actually have to think about both of those things, because unless we have essentially like an atomic swap or some kind of cross-chain swap between those two assets, and we can basically push both CBDCs and treasuries into the same sort of like almost DeFi framework, right? I'm not sure we will be able to gain the real efficiencies.
And to echo what I think a few others have said, I think there's a big difference between looking at, what would happen if you had sort of a digitization of the current dollar framework, versus what would happen if you had a true open network, digital currency. And I think that those would lead to very different outcomes. I think both could be cool. I think the first would be sort of an improvement on what we have today, but not particularly, cryptocurrency relevant, or at least only moderately so. Whereas the latter, if it were actually an open network system, unlike the current, Fedwire system, I think would be much more directly comparable to a cryptocurrency.
Excellent, thank you. I think there might be a job in the future. I think that's what I summarized. Finally, I was going to ask you a bit of advice for the BIS Innovation Hub. So the BIS Innovation Hub was basically set up to help central banks explore technology. I like to say that maybe innovation and central banking is a bit of a contradiction in term. I think we're a bit like a bumblebee, something that in theory should not be able to fly, but somehow I think we are off the ground and flying in the right direction. But I would be very keen to hear any advice that you have from your point of view on what the BIS Innovation Hub should be looking at or how it should be operating. So any final thoughts on that would be fantastic. Thank you. Let's start with Michael, maybe.
I think what you guys are doing as part of some of those, I'm not sure exactly how you call it, it's not exactly a hackathon, right? Basically, some of those open community, I think they're quite interesting. I think that, and they're definitely helping to bring some of the innovation. I mean, I think probably what will be really interesting is to create some form of sandbox that will be that will have implications, maybe not on the on the entire global scale, but that you can actually bring some of those projects into real world usage in a control environment where those can be measured, and then people could actually see the effect and they could iterate on top of it.
I would just maybe say I think there's so much happening in the open source, open blockchain ecosystem. And I think a lot of times the instinct is to want to kind of run something that's more, proprietary. There might be a vendor that's saying, hey, we have an out-of-the-box solution for a DLT for XYZ. I think maybe if you're looking at sort of, skating to where the puck is going, as they say, working with some of the major open blockchains, even running them with their own private security model or private consensus model, but staying synchronized with the infrastructure that's being built out on the public internet, could have the most kind of long-term impact as members of BIS think about different technology stacks to be experimenting with.
Sam?
Yeah, I think the biggest thing that I would say is, when you look at a number of these questions, I think there are a lot of cool things you can do, a lot of win-wins, and I don't think that these have to be sort of like super contentious or ideological things. I think a lot of these are cases where, frankly, I think there are straightforwardly better and worse ways to approach it that most parties would ultimately agree on. With proper communication. And that's the big thing that I would say is just like open dialogue between industry, between government, policymakers, central banks, and everyone else. I think will go a really long way here towards getting to where I think a lot of people would love to see new innovation coming from. So that's I think the biggest thing.
Thank you. Unfortunately, we are out of time. It's been an absolute pleasure to moderate this panel. I think my brain is still spinning trying to digest all the insights that you have provided. So really appreciate that. For the audience, please do not go anywhere. We have another great session coming up. It's on green finance, greenwashing, and green tech, navigating the challenges ahead. So once again, thank you very much to everyone, and especially the panelists. I really appreciate this opportunity. Thank you.
Thank you.
Thank you so much.